Happy New Year and welcome back to the first weekly update for 2017. I'm Julia Lee, an equities strategist with Bell Direct. Well, with us turning over a new leaf for the market, I thought it would be nice to start off by having a look at some of the longer term cycles on the market. And this chart is courtesy of RBC and looks at bull and bear markets from 1925 to the present date on the S&P 500 index in the US. RBC saying that we're looking like we're at the early stages of a long-term secular bull market, and that means much higher levels over the next several years. In this type of market, any pullbacks would be seen as opportunities, and the potential gain would be a multiple of the present value as seen in previous bull markets. Staying with RBC and looking at cycles and sectors, if we are in an early bull market, of course, RBC saying that it is looking like a buy for emerging markets as well as world markets excluding the US. But of course, the markets have had a pretty good run since Donald Trump won the US presidency, and markets now speculating that the Trump bump could be over. The worst performing commodity since Trump won presidency has been coal. We've seen hard coking coal now below 200 US a ton, in fact closer to 185 US a ton, which we haven't seen since September 2016. The key to coal prices is going to be watching thermal coal prices and what China does in terms of the working year. Last year, we did see China cutting the working year from 330 days to 276 days, and that had a positive impact on coal prices. However, coming into the winter season, we saw China relaxing that policy back to a 330-day working year, and as a consequence, we have seen coal prices winding back. So watching China and its moves in terms of the working year for those coal projects. Sure Stockbroking saying, though, it's time to sell those pure coal plays, so it has a sell on Whitehaven Coal. Staying with Shaw and having a look at the banks, where Shaw is saying that short-term the banks are looking fully valued, and it's reduced its rating on NAB, Westpac, ANZ down to a hold. In order of preference of the big four banks, it prefers NAB, then Westpac, ANZ and Commonwealth Bank last. But it still does have a buy on some of those smaller financial institutions like CYBG as well as MyState MYS. From Shaw down to Macquarie, which is looking at insurance companies, and Macquarie preferring QBE insurance in that insurance space. It has an outperform on QBE insurance with a target price of $12.34. It also has an outperform on Suncorp Metway with a target price of $13.16, but a hold on Insurance Australia Group with a target price there of $5.90. Of course, coming into the new year, a lot of traders and investors will be looking at potential stock ideas. So let's have a look at Morgan's high conviction portfolio. In the month of January, we've seen Morgan's adding South 32 to their list, but removing Bellamy's as well as Sydney airports. Sure, concentrating on some of those stocks that look cheap relative to the market, saying that Vocus, MyState, AMP, Macquarie Group, as well as CYB, all looking cheap relative to the market. It has a buy on three of those companies though, MyState, Macquarie Group, as well as CYBG. It also has a buy on Suncorp Metway, QBE Insurance, as well as Challenger Group. And now looking at Canaccord and some of their top picks. They like Collins Food for the defensive growth profile. Now, Collins Food owns KFC stores. It has 202 KFC stores. 191 of those stores are in Australia, but 11 of those are in Europe. It also has 22 Sizzler stores in Australia and 65 Sizzler stores in Asia. And look, this is a company that's shown consistent double-digit earnings over the last couple of years, and Canaccord expecting that to continue in the current financial year. It also likes Credit Corp, which is a dominant player in debt buying. It sees opportunities in terms of the US, especially with a recent acquisition that's been made there. likes Orocobra, which of course is exposure to that growing lithium battery story. And finally also Speedcast SDA, which looks at satellite communications, mostly in remote areas. And it likes this stock because it says you're getting the growth without the high multiples. So plenty to absorb in the first weekly update. So far, the market looking good for 2017, but of course, a lot of speculation around what a Donald Trump presidency could mean, but a lot of uncertainty in terms of the areas that may be looking to benefit, given the run-up we've already seen since he's won the presidency. I'm Julia Lee, an equity strategist from Bell Direct. Hope to see you next week.